Greetings from my side. I hope you are all doing well. That's great. Anyway, this is my outdooring video. Yes, I have been trading for some time now. Realize not everybody is doing well in the market. Yes, that is why I am here because I have the solution to their problems. So I was there some time ago, but I know what exactly is their problems. I remember when I started Forex, I was only taught indicators while charged me huge amounts. I paid $300. That is for beginners level. All that I was taught were indicators. But I knew in Forex there are more things into it than indicators. But at that particular time, I didn't complain. So I decided to try them and see how it will work out. I tried them but didn't see any improvements in my career or in my early stages of trading. So that made me sign up for advanced knowledge, that is intermediate, advanced and professional level. And to be frank with you, these levels are not a joke. They come with money because intermediate costs higher than beginners level. That is why most traders, after learning beginners level, they don't aspire to go further because forex trading, one thing about it is you need reasonable capital to start. That's why people after learning the beginners level and they are taught indicators, then they feel they can do well in the market, but that's not the case. It takes more than indicators to do well. So that time of some money I applied. Be frank, all that I was taught at advanced level, they intentionally reserve those strategies at that level for new traders to spend money before being exposed to that knowledge. To me, it's not bad because forex itself is very lucrative. Before you can be able to profit in the market, you have to spend for the knowledge. So I'm advising traders, those who only learn beginners course in trading, to aspire to what? To learn the advanced knowledge. But better still, you don't have to worry about that because with iForex Consult channel, everything will be taught here from the beginners level to the advanced level. So that's a good news for you. And don't forget, after my professional or advanced level of learning, I remember a friend of mine who is also a banker and stocks analyst. I approached him, told him that I have interest in Forex. And to my surprise, he laughed at me because he knows what Forex is. He knows how the market behaves. So he laughed at me and I was surprised. I said, why was he laughing at me? Before he encouraged me that, Forex is a very nice business, but it takes a lot before you can be successful because it's solely for financial institutions. That was where I asked him to educate me more about how banks trade forex. He sat me down and walked me through the various strategies banks use to trade the market. That made them very profitable every day. And after that experience, I got to know that how banks trade is far different from how we retail traders trade. And I'm not surprised the reason why some retail traders are not doing well in the market because of we stop at the beginners level, concluded that with indicators we can do very well. Meanwhile, indicators are useless in the market. They are very useless. I tried it myself. It didn't work. Something like Fibonacci, stochastics, Bollinger Bands, parabolic stacks, MACD. That's moving average convergence. Look at that. They all have big names but nothing to show off. Nothing to show off, guys. They only have big names. What is parabolic stacks? Big name but nothing. So guys, you don't have to depend on only indicators. Let's use advanced strategy because this market is for banks. In the market, you have to trade like what? How banks do their trading. You have to follow their footsteps. That is why I am here. First, I myself I learned how to the professional level, so I am well equipped in that. And aside that, my friend also taught me the banking view of trading. So I am well loaded. I decided to share it with my people because I know they need this strategy for them to do well in the market. After all, forex is for the governments, for the banks, for individuals. So I don't see any reason why I keep this knowledge to myself and be profiting alone. It doesn't make sense at all. I took it up for myself. Why can't I open a YouTube channel and reach out to many people that I could for them to also benefit free of charge? That gave birth to my channel. So guys, the teachings here are going to be free. Though forex education is a very expensive, especially from the beginners level through intermediate, advanced to professional level, very expensive. The beginners level alone, they charge $300. Some institutions charge more than that. And intermediate, some institutions charge $400, some charge $500, and so on. It varies. So by the time you go through all the levels, imagine that money can even do your masters and your PhD. But you know, forex itself is very lucrative. It's very rewarding. It's good you spend to acquire the knowledge, because definitely when you get to that level, you become profitable. Because I believe in sharing, so I want to share with you. You learn from me, and I also learn from you through your feedbacks and your comments. That's it. So we are moving now. Forex, FX for short. It means foreign exchange. Forex is all about buying and selling. Just like how we have our traditional markets around us, where people buy and sell for profit. But forex is a digital version of our traditional markets that our parents, especially our mothers, sell. It's an electronic market for trading only selected 39 different well-to-do currencies are traded in forex. That means forex what? The biggest market in the world. It's a digital version of our traditional markets. It's all about buying and selling, but it is done solely online. But principle is the same: buy and sell. This one is the online version. And I'm not surprised many people are not aware that there's a business called forex, because this business was mostly traded by central banks, financial institutions, big companies like investors, well-to-do people, governments in the olden days, because previously you needed huge capital, billions of cedis or billions of dollars, billions of naira, and so on. So that made it limited to only the big guys in the world. And then another factor too is because of the inaccessibility of internet. Because previously in the olden days, internet wasn't accessible to everybody, so that made it limited to only a certain group of people. But these days, internet is everywhere. Even if you are in a village, you can access internet. So because of the internet or the digitization, forex is accessible to individuals. And the second aspect also is the trading capital. Instead of you starting with a huge amount previously, now the trading capital has been reduced. As low as $10 you can start forex trading. So that's a good news. So I'm not surprised many people don't know of this. And those who know too, they think forex is still for financial institutions. Meanwhile, individuals are now trading it. So guys, you have to look sharp. Alright. Yeah, as I said, it's traded by big institutions. Wow, look at this. Look at this, my people. It's not a joke. Forex is worth $2.409 quadrillion. Can you imagine that? $2.409 quadrillion. That is what it's worth. It's not a joke. This tells you forex is not a joke. It's loaded with money. Wow, what am I saying here? Daily transactions is what? $6.6 trillion. Can you imagine? This is insane, my people. Look at this. Daily transactions, or not weekly or monthly, or daily transactions, $6.6 trillion. This is insane, guys. More than my country's GDP. Wow. And we have a business like this, worth $6.6 trillion on daily basis. Then why will people still rely on you? Expect your country to pay you salary that will make you comfortable or make you wealthy? It is only through this kind of business. Look at this. In this business, you can make enough money, more than what people are earning as salary. Can you imagine? This is insane, guys. So imagine 0.001% of this figure could make you a fortune. It's not a joke at all. So please, let's look sharp. Let's learn the skill to trade. It's very important. Without learning how to trade like banks, there's no way you can do well. in the markets. So please, you need someone to coach you or someone to educate you in this market. You cannot just stand up on your own and start trading the forex. No, you need someone to what, to coach you or to shorten your learning curve so that you do well. That is why this channel is here, guys. This channel is a blessing to many. I can testify that because I know what I'm talking about. I know what I'm going to share with you. I'm going to share with you heavy duty stuff that you never see on your regular YouTube channels. When you subscribe to my channel, then you notify anytime I upload a new content so that you follow in a systematic order, because my teachings are going to be in episodes from beginners level upwards like that. So there's no way you have to miss any content. If you miss any content, you won't flow well with the lesson. So kindly click on the subscription button so that you flow as I follow. One thing you have to take into consideration is that assuming price is moving upwards or in an upward trend, it means it's going to fill an order at the top. You call it sell orders, because sell orders are always at the top, at the supply zone or at the resistance zone. So price always go up to fill an imbalances sell orders at the top or to fill orders. So take note, anytime price moves downwards to, it means it's going down to fill buy orders at the down. Buy orders are always at the down and sell orders are always at the top. So please take note of this, it's very important. Now, we also buy at major demand zones. The down is demand zone. Demand means when price is very cheap. When price is at a wholesale price, cheap, they all mean the same thing. It also means discount price. So discount also means a very cheap price. So discount is always located at the down, at the demand zone where demand is always at the down. Discount is always at the down. Take note. And wholesale price is always at the down. And then support zones too is always at the down. So please take note of this. They all mean the same thing. Wholesale price, discount price, support zones, and the value, they all mean the same thing. So we buy at a wholesale price, discount price, demand zones, support zones, cheaper price, or when price is under value, or when we are trading, the instrument we are trading is under value. Under value means it's very cheap. The resistance zone is always at the top. Take note. So we sell at the resistance zone at a retail price. Retail price means what? Resistance zone. At a premium price, at a supply price, at an expensive price. So when price is at the top, it means what? It is very expensive. It is what? At its premium price. Premium means expensive. Retail price means expensive. Supply zones means expensive. Resistance zones means expensive. And overvalue also means expensive. So take note of all this. They all have big names but the same meaning. So one thing about forex is when you start learning, especially at the beginners level, you'll be taught support and resistance. Support means what? Yeah, at the down. And resistance means what? At the top. So that's the basic things that they teach at the beginners level. But as you advance, you will see that you'll be exposed to more advanced words like retail price and wholesale price, premium price. So those are the advanced which are related to business. So take note. Now another thing you have to know about forex trading is, let's say you are trading currencies, and currencies are traded in pairs. So we always buy the stronger currency and sell the weaker one. So you don't worry, you shall get them. So take notes. Alright. Requirement. What makes you qualify before you can open a brokerage or a forex account? The first one is what? You have to be 18 years and above, for the reason being that at this age, it is assumed you might have completed your high school education, because in Forex, it involves English. You have to read and understand. It also involves simple calculations and how to manipulate basic function of computer. And then secondly too, at this age, it is assumed you can think on your own, because forex trading, before you buy and sell, is decision. You don't buy anytime and sell anytime. You have to analyze the market and take the right decision before you take your positions. So at this level, or at this age, it is assumed you are of age and you can take decision on your own. Alright, Gmail account or an email account is very important, guys, because before you open accounts, especially live accounts, your login details will be sent to you through your email account. So that's what I like about Forex. It's very secure and safe. Nobody would ever log in into your account without your knowledge, because your logins, everything will be sent to you through your personal email. So you have the total authority over your account. The same thing applies to deposit and withdrawal. It is only you who can deposit and withdraw, nobody. So that makes forex trading very secure. National identification cards, very important. Any national identification cards to prove that you are a real citizen of that country. It can be your traveling passport, your driver's license, or your voter's ID. Yeah, any one of them. Your bank account, very important, because before you deposit to the brokerage account. If you make profits and you want to withdraw, you withdraw through your bank account. So it's very important. So if you don't have bank account, please make sure and open any bank at all. Bank statement is free. Once you open a bank account, you just request for bank statement, because bank statement will be used to verify your live account, because you will using your bank account to withdraw your profit. So they will use your bank statement that contains your name, your residential address as a proof to confirm your bank account. So there's nothing to worry about. Everything is genuine. Visa card, yeah, Visa or MasterCard. You can add Master to it if you don't mind. It's very important. It's a MasterCard that you are going to deposit and withdraw. Any of these, either MasterCard or Visa card, they all play the same function. So you have nothing to worry about. Guys, this makes forex trading very genuine. You have to use your personal Visa card or MasterCard to deposit. And before the transaction can go through, your bank will send you a confirmation code that you enter yourself before the transaction can go through. Same thing applies to what? Withdrawal. If you want to withdraw, your bank will send you a confirmation code so that you confirm it before the transaction can go on. So it's very safe. Nobody can pass behind you and withdraw or do any transaction without your knowledge. This makes it very secure. So forex is very real. What makes it more real is when you involve third party into it. When you involve third party into forex trading, that makes it insecure. Because forex trading, as you trade it yourself, that makes it very genuine. So it's always good to learn how to trade and trade yourself. Don't rely on anybody to trade for you or manage your account for you. Never. Alright, I have a bonus one too for you. The bonus requirement, which is what? An affidavit, which I didn't include among the requirements here. Please, you can write it down yourself. An affidavit. Called an affidavit will also be used to verify your live account. Either affidavit or your bank statement, any one of them. So if you have bank statement, you don't need an affidavit. But if you don't have bank statement, you can use your affidavit for the verification. So that is why I didn't include the affidavit, because I already have a bank statement here. Alright, we are moving. Tools needed to trade forex. Tools can be what? Any equipment or materials. They all mean the same thing. So guys, forex, you need one or two things before you can start your forex journey. The same thing applies to any business at all. If you can do any business, you need what? A kiosk or table or a store. Or if you want to go into pure water business, definitely you need ice chest, table and other things. So the same thing applies what? Forex trading. As you already know, Forex is purely an online business. So definitely, what do you think you must have? Let's see. Computer. There is no way you can trade forex without a computer. You see, that is why learning to operate computer is very good. Now you know we are in a digitization world, so everything is about technology, computer. So please, it's very important. Computer can be what? Either desktop or a laptop. Yes, I know someone might say, but I don't have a computer, I don't have a laptop. Don't worry, if you don't have a computer or laptop, that is not an excuse, guys. By all means, you might have a tablet. Yes, you heard me. You might have a tablet. If you don't have a tablet, don't worry, that is not an excuse. Because in Forex, you have nothing to excuse about. Forex doesn't listen to an excuse. So if you don't have a tablet or whatever, iPad or whatever, by all means, we all use smartphone. You see where I've gotten you. We all use smartphones. So Forex, the interesting part is that you can trade it on a smartphone. So you see, you have nothing to excuse about. It's very important. If you don't have a computer, you can use tablet. Without tablet, smartphone. But it is always advisable as a beginner to start with what? A computer. Because you using computer to be exposed to the varieties of various functions being displayed to you. But with the phone, you'll be limited unless you are skillful or you start trading for some time before you can be well versed using the smartphone. So my advice is what? As a beginner, try a computer. Alright, reliable internet connectivity, very important. As you know, online deals with internet. Banks always work with internet, so there's no way you as a retail trader will not trade using internet. You can't run away with internet. I remember in my early days of trading, when I had reliable internet, I was thinking they were talking about fast internet connection. So I bought personal Wi-Fi at a very high price. After that, I remember my phone has a hotspot connection. I decided to try the hotspot and see whether it can also work perfectly. And to my surprise, it works well. Since then, that's what I use. So my people, don't worry at all. Don't spend money on a high connectivity. No. If your smartphone, you are cool to go. So you see, there's no reason you will give excuse not to trade forex. What do we have here? Skill. Oh my god. That is why iForex consult channel is here. My people, in terms of skill there, you are cool. You have nothing to worry about. Because with the help of my channel, everything will be hot, breaking down into details for your understanding. So no worry at all. You need necessary and required information to trade. Those who don't do well in the market is because they have what? Poor foundation. They stop at only beginners level, learned indicators, and then concluded that they will do very well. How can you do very well by learning only the indicators? Doctors don't study for only one semester in school and then conclude that they will do well in their career. Police teachers, nurses don't learn only for one semester and then do well in their career. No. So the same thing applies to forex. You can't only learn a beginners level and then see yourself to do well in the market. You have to pass through all the necessary levels. That is why this channel is here to help you. I know it is not everybody who can go through the levels up to the professional level because forex is very expensive. Forex education is very expensive because it is very rewarding. That is why its knowledge is not easy to come by. But everything being equal, this channel will solve our problems. It will sharpen our learning curve. Alright, let's go on. Broker. Oh my goodness. Broker is here, my people. Broker is a very important tool tool. It serves as a financial medium that processes traders' deposit and withdrawals. So its function is what? A financial institution for traders. That's all. So it facilitates deposits and withdrawals. Very simple. MT4, MT5 platform is different from a broker. This one is a software app that you download and install on your computer. So this one is on this platform that you will trade Forex. But a broker is the online financial institution that processes your deposit and withdrawal. Almighty trading capital. Without trading capital, there's no way you will trade the market. But the good news is you don't need so much to start trading. With only $10 upwards, you are good to go. I even traded with $2 and raise it to a certain amount. So with $2, you can start trading. But just like I only trade instruments which has small pips value, like Euro New Zealand. I remember there was a time I used $2 to trade Euro New Zealand because that pair has a low pip value. But it's not advisable to start trading with $2. It's not reasonable. Start with somewhere $10. But to feel more secured, you have to start with what? Any reasonable amount that you are comfortable with. But you can start as low as $5, $10, $20. Yeah, that one there is cool. You can start with those amounts. But it also depends on the type of broker you are using. Because some brokers have a certain minimum amount that you can start with. Some have a minimum amount of $100, some $50, others $20, $10, $1. So depend on the kind of broker you are using. Types of forex markets we are going, guys. Make sure you write anytime you are watching my content. Write as time goes on. You go through your writings. It's very important. You cannot watch the video once and then understand. No, you need to go through, write the important ideas or points so that anywhere you go through. It's very important. Alright, bullish markets. That's very powerful. What do we mean by bullish? Bullish means you want to buy market. This is bullish, guys. Impulse. This is an impulse move. Anytime you see a long candlestick like this, it is what? An impulse move. Retracement, impulse move, retracement, impulse move, retracement, impulse move. So this is what? An uptrend market because it is moving upward. It is what? A bullish market. Bullish market means what? The market is going upward. Are we seeing it? Or rising. You also call it a rising market or upward trend. So it means buying. Anytime you buy, it means you are expecting the market to go upward. It also means long. Long means you are buying. Are we seeing? This bullish market means so many things. Someone might say, I am in a bullish market, or I am in a rising market. I am going long. I am in an uptrend. I am in a buying market. They all mean the same thing. Don't be confused. Bearish market is the opposite of bullish market. This is what? Our bearish market. Impulse move, retracement, impulse, retracement, impulse, retracement, impulse, retracement. You see? So bearish means downtrend or falling market or short. Short means you are selling. Don't forget, long is for buying. Short means sell. That doesn't mean this trend is what? Shorter than this trend. It's just a thing. So take note. Short means what? Bearish market, falling market. Alright? We are moving. What do we have here? Consolidation. Consolidation means the market is moving sideways like this in a range. The range means what? Sideways. Have you seen? This is sideways. It doesn't go upward, it doesn't go downwards. It also means equilibrium. It means accumulation. It also means fair market value. It also means orders are being matched or a matching process. That is, buy orders are being matched with the sell orders, and sell orders are being matched with the buy orders. So that's it. So orders are accumulating or the equilibrium market. Take notes. Let's look at these three market types and see which one is appropriate for us to trade. Now don't forget, we make profit when market goes upwards or downwards. When market trends, that is the only time we make profits. When market is going upward, you buy at this zone. So from here all to this place is our profit. So this is our profit. You enter here and price moves upward. Our profit is what? In between. Because we only make profit when price trends upward or downward, and this is a downward market. Assume you saw at this zone or at this price and price moves downwards, you are in a profit. Sell profit. You have sell profit and buy profit. In forex, you make profit in two ways. You make profit when you buy and price goes in your favor, and you also make profit when you sell, price moves in your favor. To me, the best market to trade are bullish markets and bearish market, because both markets move in what? In a certain direction. But let's look at the consolidation. Consolidation doesn't move in a certain direction. It's difficult for you to what? Maximize profits. Assuming you bought here, then instead of the price and go upward, see what it has done. The price move upwards and then comes back to your entry point, and then move upwards, come back to your entry point. It's very difficult for you to what? Maximize profits. Have you seen? So this market, if you are not skillful, there's no way you can profit from it. But it is mostly for scalpers. Those who scalp, they are well experienced in the market, so they can do well in this market. But for the beginners and for normal traders and bankers, they utilize these two types of markets. Very important. Phases or stages of markets. Market has various stages. Before market moves in a certain direction, it has to begin from a certain stage. Have you seen it? To the next stage. So now let's look at the various stages that we have. Accumulation stage. Accumulation stage, as we stated earlier, means what? Sideways. Or let me illustrate it. Accumulation. This is what? Accumulation. Have you seen? Accumulation is what? Consolidation. It means there's no activity going on here. The market is what? Resting, moving sideways. It is in its fair market value or equilibrium stage. Have you seen? There's no activity going on, even though the price is moving, but not at significance. So it is not conducive to trade this market. Have you seen it? So this is what? Accumulation. Before the price moves in a certain direction, it has to start from accumulation stage. Have you seen? It's just like before you move a car, you have to check the engine healthiness before you put the car in gear, so that the car will start moving. Same thing applies to the forex market. Before the forex market starts moving with full force, it has to start from accumulation stage. Now, so after the accumulation stage, the next step is what? Manipulation stage. So the manipulation stage, that is when inputs are being made. It's a stage where buyers and sellers are negotiating. There's a negotiation which goes on in the market between buyers and sellers. At this stage, buy orders and sell orders are being inputted by stockbrokers. Example, when you go to trading floor at New York Stock Exchange, Tokyo Stock Exchange, or Sydney Stock Exchange, over there, stockbrokers are there, traders are also there, so they receive orders, or buy and sell orders. So it can be any part of the world that you just call them and say, what, I want to buy this instrument at a certain price or sell this instrument. It is their responsibility to what? To input the data. So as we are inputting the data, you see that the price increase, the volume of the price will what? Will be stronger than the accumulation volume. So you see the price moving with what? Bigger momentum. Like this, but it's still consolidating because orders are being inputted. So at this stage, buyers don't know whether they will take over from the sellers. The sellers also don't know whether there will be more than the buyers. So there is a conflict between them. As the buyers move the price upwards, then sellers also move the price downward. So there's a sort of negotiation or conflict between them until the input is finished. When the input is finished, or the stock traders have finished inputting the orders that they are receiving, then that leads us to the next stage. And before that, at this level, retail traders stop hands or stop losses are being handed. because maybe you see when the volatility is high like this, the momentum candlesticks are bigger than the accumulation market. The buyers may think that as the price is going upwards, they may think the price will continue going up, so they will enter to trade. Let's say they enter this position, place a stop loss at this side. As the price get to the top, then the sellers will push the price downward. So you see that the price crosses the stop loss. So as price crosses the stop loss, that means the buyers are taking out from the market. Have you seen? At this stage, it is the stage that price take traders stop losses. So it's a stop loss hunting level. As it happens like this, as I said earlier, the orders are being matched here. Sell orders and buy orders are being matched, and then the inputs are being made by the stockbrokers at the exchange or at the trading floor. Alright, so as time goes on, then you could see that now there's the next market stage, which is on the distribution stage. At this stage, this is the stage where the outcome of the input will be displayed. So when the buyers are or buy orders are more than sell orders, you see that price will move upwards. It means buy orders are in control. The buy orders are more than sell orders. After the inputs, the buyers are in control. They have won. Their orders are more than the sell orders. That is why the price is moving upwards. But when the trend is hot downwards, it means what the sellers are in control, or the sell orders are more than buy orders. So all the time there are people who are at the trading floor, at the exchanges, New York Stock Exchange, Tokyo Stock Exchange, London Stock Exchange, Sydney Stock Exchange, and so on. So they receive orders from all over the world, from people who are investing, from the investors, from banks and institution companies and so on. So they do the input. After the input, then we see the trend setting off. The good market to trade is what the distribution stage. It's the distribution stage that we can have what a meaningful profit. Assuming you enter a trade here and price goes upward, you are in profit. Or you enter store order here, you are in store profit. Yeah, but manipulation stage too, you can scalp, but scalping is for the skilled traders. So if you are not skillful, you cannot profit in this market. But it's also good, people do profit from it. Yeah, either this or this, but this is the best market to profit from. Very simple. Benefit of forex trading. Forex can be traded anywhere, anytime, anywhere means what? It can be traded at home, at office, in the car, on a plane, any part of the world. Yes, it can be traded everywhere. That is what I like about forex trading, because you have your own freedom to move around. When you are a forex trader, you can move around. You are your own boss. Nobody has control over you. You are your own CEO. You can trade anywhere you wish. Have you seen? You travel all around at the beach, in the hotel, restaurant, and then trade. You are making money whilst you are traveling around. So that makes forex unique. Anytime means what? Daytime, in the night, because forex is 24 hours a day. It doesn't close within a day. It works 24 hours from Mondays to Fridays. So can you imagine? If for banks, as I said earlier on, banks work from Mondays to Friday, except weekends. So forex too, from Mondays to Fridays. It closes on Fridays evening, 8 o'clock. That's where the market closes. Take note. So anywhere, anytime, very convenient. High liquidity. That's the largest market in the world. It has so much money in the market. As it has so much money in the market, that makes it possible for you to also make profits, because the largest market in the world, can you imagine that? So there is more money in the market to trade. It's a lifetime source of income. Yo, this is the good news. It's a good news, my people, especially when you are on retirement, you can still trade. As you put your lenses on, and then you sit under a tree with your legs on the table, with the soft drink, you are cool to go. Yes, lifetime source of income. Very important. Very important. You see, there's no retirement in forex trading. You can trade as long as you wish. At your old age, with the help of your sunglass. Cool, because laptop is not heavy. You just put it on your lap. That's all. Low transaction cost. Yes, Forex doesn't cost so much to transact business. As I said, it's not like how it used to be in the past. Now everything has been made simple. As little as $10 and so on, you can transact your business and you're making profits. It's very rewarding and lucrative. Yes, as it is the biggest market in the world, and its daily transactions is what $6.6 trillion. My people, don't worry, you can make much profit from the market. Very rewarding. You can start with small capital and raise it huge. That is what everybody does. You start small and then you grow it big. Just give yourself 1 year, 2 years, you become successful and financially free in the market. So Forex is very rewarding. Forex is the only business that can make you rich in the long term. Let's say 1 year, 2 years time with consistency
and power of compounding,
you'll be rich. But before you can be rich, you have to trade like banks. You cannot use indicators and be successful in the market. I tried it personally, it didn't work. That is why I'm telling you with authority. You can't use indicators to do well in this market. You need what? An advanced level
strategies.
That is why
this channel is here.
That's it. Many different access to trade. If not Forex, then what? This is the only question I keep asking myself. If not Forex, then what? Is it military or what? I cannot be a military at all. If not Forex, then what? You have many different access to trade. You have so many currencies. As I said, we have about 39 different foreign currencies in the market. Aside that, we have indices. Look at that. Cryptocurrencies are there. Can you imagine? The opportunities here are huge, my people. Leverage. Another powerful one. This is what very important one day. Leverage is what is a facility that a broker, don't forget we talked about a broker earlier on, and we said that a broker provides what financial services or that facilitates your deposit and your withdrawal. Leverage boosts your account size. Let's say you start with a small trading capital like $100, but with the help of leverage, it boosts your account. Like someone who has a $1,000 trading account, have you seen? With the leverage, though you are trading with small capital, you'll be able to handle huge transactions, thereby making you huge profits. I love this one. You pass the knowledge on to your next generation. That's superb. Yes, definitely. As you trade, your children or your grandchildren will be watching you. As you are making profits, they will also have interest in it. There's no way they will not refuse to also learn the forex trading. You will let impact the knowledge, the skill onto them so that they will also trade and be successful. So you see, these are some of the benefits. There are many, guys, but these are just disadvantages. Everything that has advantage also has a disadvantage. Forex also has a disadvantage, but the good news is its disadvantages are less than its advantages, so you have nothing to worry about. Leverage risks. As I said earlier, leverage boosts one's account to handle huge transactions for you to make huge profits. But in other scenario, when trade doesn't go in your favor, leverage can also make you lose money. Have you seen? As it can also help you make huge profits, it can also make you lose money. It is always advisable to use a reasonable leverage. You have leverage like 1:100, 1:200, 1:500. The best handwriting so far. 1:50. 1:20. Yes, 1:2,000. So leverage means let's say you have $100 as your capital, you are taking or you are using a leverage of 200, 1:200. It means the amount of capital that you have in your account multiplied by 200. 100 times 200 is your new trading capital, your account, your brokerage account that you be trading with. Let's say you are using 1 to 100. The trading capital that you have in your account multiply by what? 100. Assuming you are using 50, $100 multiply by 50. So you have your new trading capital. So that is both your account. As it helps you cut profit, it also helps you lose money. So that's how it is. It's always good to use a reasonable leverage. Don't use too high leverage and don't use too low leverage. Very, very important. Alright. Sharp fluctuations. Yes, this is in line with high impact news. Forex trading, it involves news trading. If you are a forex trader, it is your responsibility to follow news. So we have low impact news and then high impact news. The high impact news makes the market or the price to fluctuate sharply in the market. If you are not always careful or alert in the market, this fluctuation can take you by surprise. It's always recommended to follow news or always be alert, always set your stop loss. When you set your stop loss and the fluctuations happen, it will not affect you so much. But if the fluctuation goes in your favor, then you'll be in profit. But if the fluctuations move against you or against your direction, then with the help of the stop loss, you minimize losses. Forex scams and then fraudsters. In this forex business, there are so many scams that you have to be careful of. It happens to me in my early days of trading. When I started trading, you see, I told you first I was introduced to indicators. When I started trading, I wasn't profitable using indicators. So I decided to follow professional traders and signals. Signals means professionals analysis. Those who can analyze the market well and then predict the market movements. So they give out signals to the new people, those who don't know how to analyze. As a new trader in the market who doesn't have knowledge or experience in the market, so I decided to follow someone I trust so much who is doing very well in the market. So I decided to follow him or follow his signal. So he charged me, so I paid. He told me he will link my account to his so that anytime he is in profit, so will I. I agreed and I trusted him, so I paid. He told me that after the payment, I should screenshot the message payment so that I will forward it to him. Soon after I paid him and I forwarded the message, no, then he blocked me. Days after, I reconnected to him and I told him what happened. And he said he wasn't the one. He said he wasn't the one I paid to, so there are many scammers out there who use his image to fraud people. So he wasn't the one, so I should be careful in this business. So since then, that prompted me to learn for the advanced level to analyze the market myself. So if it were not to be that experience that I encountered, by now I would still be following signals and then be slave to him. I learned from that encounter. To me, it's a lesson. It also helped me to push myself higher to learn the advanced knowledge in forex trading. So in this business, what I'm saying is you have to be careful with the scammers. There are a lot of scammers in the business. They come with different formats. As time goes on, we will touch on the varieties of formats scammers use in the market, so you don't worry about that. For the purpose of this video, we are not talking into detail about forex scammers, but in the subsequent videos we shall touch on that. Don't worry about it. Internet failures is also another bad side of forex trading. At times you'll be in an open position and the internet will fail you, but it doesn't happen for a long time, just for a few seconds or there to reconnect. So that's not a big deal. It's not a big deal. You don't have to say because of the internet failures you won't trade forex. Oh no, don't say that. This one doesn't happen all the time, just once a while. But when it happens it doesn't last for long, just for short seconds now, then it will reconnect back. Alright, we are now on a forex marketplace or forex market makers. Makers or players means those who take part, or the major people who take part in a forex market. We have government. As you can see, every government trade forex. Every government in any country trade forex. That means forex is legitimate. Guys, as governments are trading, then we can also equally trade. So we don't have any excuse to give about forex trading. Government equally trade forex. We have investment banks. Investment banks also trade forex. It's very important. You have business and corporate organizations. Have you seen? Fund managers. These are big guys in the market. Brokerage houses. Can you imagine? These are big guys that handle huge transactions. Brokerage houses. Yes. And you also have what? Big banks. As I said, this forex business is for financial institutions banks. And we have banks like JP Morgan, Deutsche Bank, Barclays Capital, Bank of America, Goldman Sachs, Citigroup, and the rest. You will see that these banks are very big. They trade forex with huge trading capital, whereby handle huge volume of transactions, which give them the high level probability of profit. They handle, as they trade with what huge trading capital, and they are able to what handle huge transactions. This give them what high profit. Have you seen? So these guys, they are the major forex movers. They move in the market. So before you and I can make it in the market, you have to follow their footsteps. You have to use strategies that they use in making profits in the market. So it's very important. Very, very important. Keywords or terminologies or important words. Alright, guys, my people, this is what a very important aspect of our learning session, because once you understand this aspect well, as you go on, everything will become clearer to you, because these things that we are coming to learn, we are going to use it throughout our forex journey. Yes, so these keywords that we are coming to learn, they are very, very important, so please take note of them, because as time goes on, we are going to come across them one after the other. Discount price. Discount price, as I said earlier on, is what? When the price is cheap, is what? It's a discount price, or at the demand zone, or at a support zone, or at a wholesale price. Yes, or when the instrument that you are trading is what? Under value. That is what? Discount zone. So discount zone is always at the bottom. It is always at what? Demand zone. Demand zone is always at the bottom. So take note. Premium price. Premium price is a price that is very expensive, always at the resistance zone. It's at a high top of the chart. Have you seen? So premium is when the price is expensive, when the price is at a retail price, or at a resistance price, or the price is at a supply level. Have you seen? So that is what a premium price. Take note. Equilibrium. Equilibrium means, I think we mentioned equilibrium in our previous episode. It means consolidation, when price is moving sideways, or fair market value, sideways movement of price. So take note. Wow, this is another great word. Proximal line is very important. This is what advanced knowledge in forex trading. I learned this thing in a professional level. This cost me huge money. Proximal line, that is what, it's a line. We are talking about line. Have you seen? There's a line here. So we are talking about a line. Anytime you hear proximal line, then it's referring to a line. So it's a line that touches the body of a consolidated candlesticks. We have a candlesticks which is called a consolidation candlesticks. We shall come to that when we are doing the practical on the price chart. So it's a line that is drawn against the body of a candlesticks. Let's assume this is a candlesticks. It's not only one candlestick. It can be many candlesticks. So the line that is drawn against, so this is against the body of the consolidation candlesticks. It has a function. So as you are doing the practical on the charts, you shall go deeper, so that everything will become clearer to you. Now we are looking at what? The distant line. This one is talking about what? Line. So they all talking about the same thing anyway. This one to line, this one to line, but they have differences. So this one has the proximal line, is a line that touches the body. This one is mainly talking about the body of the consolidation candlesticks. But the distant line, that one is talking about what? The lows and highs. This one is talking about, this one we are not talking about the body. We are talking about the lows and highs. The lows and highs are different from the body of the candlesticks. You don't worry, as time goes on, the new people, you talk about the candlesticks, then you know more about it. These are the wicks of candlesticks. This one is also another wicks. The wick. The body is what? The space in between. So these are the bodies. And the top ones are the wicks. It can be long. So these are the wicks. The distant line is the line that touches lows and highs. So these are the highs and these are the lows. It touches the lows of the candlesticks. Have you seen the lows? It touches exactly where the wicks are. So that's the high, that's the low. But the proximal line is talking about what? The body. The body. So we can have another line here, which is what? The proximal line that touches what? Only in the bodies. Very simple. Alright. We have price gaps. We have gaps in the market, guys. I know those who are new in trading, you don't know what gaps are. You don't worry, just take and stay. After this video, I'll take you to the charts, then I'll show you what gaps are. So gaps are what? Empty areas or sharp breaks in the market with no trading occurring. So they are empty areas. So you don't worry, as time goes on, I'll take you to the chart and everything will be clear to you. I'm talking about what? Empty areas where no trading is taking place. We are continuing. Pips, percentage in points, which is the smallest movements the currency price can move. It is the distance covered by prices. Have you seen? So as price moves upwards like this, in an uptrend move or in an uptrend direction, so assuming you entered here and price moves upwards, let's say up to this level, from here to here might be what? 10 pips. So we say what? You are in what? 10 pips profit, or you are in a profit of what? 10 pips. So pips is a measurement of distance, also unit of measurement of what? Price movement. Unlike how we measure road in kilometers or miles, or we measure length in centimeters and so on. Forex trading too, we use what? Pips to measure price movement or the distance from your entry point to where your profit is or where your loss is. So when price moves here, this is another 10 pips. So 10 plus 10. So from here to here is what? 20 pips. So you see what? You are in a what? Profit of 20 pips. Another here is another 10 pips. So 30. So from here to here you are in what? 30 pips profit. Here to 40. Here to 50. From here to here you are in what? 50 pips profit. So the same thing can happen when you are in a loss. So you can also say you are in what? 30 pips loss. So pip is what? Is a measurement of what? Price movement. Very simple. Loss size. Loss size is standard unit of what? Measurements or the size of transactions or volume, which is part of your trading capital. Have you seen? So loss is what? Is a part of your trading capital. Assuming you are trading with $100 as your trading capital. Anytime you want to trade, you don't trade all the trading capital, all your $100. So you trade with part of what? Your capital. Let's say you are trading $10 out of what? $100. So that $10 is 10% of what? Your capital. That is in your trading account. Have you seen? loss side, which is what part of the volume or the our trading capital that we use to trade, is very simple. The loss side that you use, you determine your profits. When you use a higher loss size, then your profit will be higher. When you use a smaller loss size, your profit will be what? Small. Leverage, we discussed leverage already. It's an instrument that your broker will give you to boost your trading account. Stop loss. Yes, stop loss is a mechanism that traders put in place to minimize their losses. Assuming you place a trade here, this is your entry price and you want to sell. As you place a trade here and the price is moving downwards, always you have to, there's something we call what? Stop loss. So you place a stop loss here. You enter here, you place a stop loss here, so that when in case price reverses and hits your stop loss, then automatically the trade will close. That means from here to here is your loss. You are willing to lose from here to where you place your stop loss. You can decide to place the stop loss far above or more closer to your entry point. It's based on your calculation or the amount of loss size you are using to trade. What stop loss does is it minimizes your loss, because if you don't place stop loss, as price reverses backwards and as far back the price can go, that means you are in a loss. So from here, your entry point to as far as the price can reverse to, that means from here to here, or you are in a loss. But when you place a stop loss and the price hits your stop loss, the trade will close automatic. So when the price continues to go beyond, you are already out of the trade, so you will no more continue to be in a loss. So that is one thing about what? Stop loss. So it's always good to place a stop loss in every trade to minimize your loss anytime the price reverses back. Yes, it says as what? Your loss taking, it will take your loss for you. We are continuing. The key words are many because forex trading is very broad. Overbought. Overbought means the price is very cheap and the value. You always buy at the demand zone. Demand is always at the bottom. So overbought, it means the price is at the bottom here. And then overbought means what? The price is very cheap at a discount price or at a wholesale price or demand zone, support zone or undervalue. They all mean the same thing. Oversold, we sell at the top, resistance zone. So oversold zone will be somewhere here beyond the resistance zone. Let's say the price will cross the resistance zone small. So this is what oversold zone. So that means the price is very expensive or the price is at its premium level or resistance zone, supply zone, retail price, overvalue. They all mean the same thing. Imbalances. Imbalances means unfilled orders or gaps. That is what imbalances. Unfilled orders between buy orders and then what sell orders. You always have two orders in the market. We have buy orders and sell orders. When the buy orders doesn't match with the sell orders, that is the gap, the imbalances. That makes the price to always move upward to fill the imbalances in the market. Have you seen? Let me see whether I can illustrate this. Assuming we have orders here and then the price is here, this is what a buy order or buy orders are here. So after the price has taken care of the buy orders, automatically it has to go fill the sell orders, because at first price was here. So the price started moving from this side to the demand zone. As price came to the demand zone, it has to go up again to what? To fill some orders that are left in the market. The market imbalances or gaps. Market always go up. So when anytime you see market going up, it means it goes out to fill orders or to fill the gaps in the market. The gaps created by banks or big institutions. So it's going to fill the gaps in the market. The price doesn't move just like that. It moves because of a reason. It moves to fill gaps in the market, the imbalances of what? Buy and sell orders. We have open positions. It means you are in a trade. You are either in a profit or a loss. That is for open positions. That's it. Very easy. Margin calls. That one is a call from a broker. Margin call, at first I thought I will receive a call from my broker through my phone, but it doesn't work like that. I remember my early days, I used a very big lot size to trade. Before I realized, I received a margin call from my broker. That was the first time I received a message from my broker. It was a message anyway, email message, an email, and to notify me that my margin is below 100%. Anytime your margin is below 100%, then you'll be notified through an email so that you either close your positions or they will close it automatic for you. When you are trading, by all means, you will see the margin percentage over there at the bottom. I'll show you later on. Very simple. Keywords continuous. Alright, zero sum game. When we hear zero sum games, it means if one trader loses, another one gains. That is all it means. When one trader makes profits, another one also loses. And then flat or square, it means you are taking no position, you are not in a trade. It also means square. Fail orders. Fail orders means consolidation, equilibrium, fair market value. It means orders have been, it's like this. These orders have been filled. Sell orders are matched with buy orders, and buy orders are matched with sell orders. There is no gap in the market. The market is at equilibrium consolidation. Unfilled orders is just an opposite to what? Filled orders. Unfilled orders means demand and supply zones. It means imbalances or gaps. There are gaps in the market. Assuming price moves from top to downwards, and then later on they started to move upwards. Between here and here, between here and here, this space is our unfilled gaps. Price has to move up to this level to match or fill the sell orders here. Always, that's what price does. That's it. Candlesticks, wicks. Our candlesticks. Wow. The body itself is the candlestick, and we are looking at the wicks. So the wicks are the extended aspect of the candlestick. So this is the body of the candlestick, and so these are the wicks. Channel. When we talk about channel, it means trend forms by what? Support and a resistance. So let's draw our support. This is what our support, this is what our resistance. Support is always at the down, resistance is at the top. We're talking about channel. That's to move in a certain direction. We have diagonal channel and then a horizontal channel, so don't confuse. So this is our diagonal channel and this is our horizontal channel. We say what? Channel is a trend formed by what? Support and a resistance. And support is always what? At the down, that is our demand zone. These are support, resistance. So it's a trend form. So now let's look at our price. So the price move, upwards, retraces, upwards, retraces, upwards. That's its price in between our resistance and support. This is for channel. Same thing can apply to the horizontal one. To come down, then up. That's it. We have what? Horizontal channel, diagonal channel. Simple. Entry point is our buying or selling price. It's a price level where we enter trade. Exit point, price level where we close our trade or where we take our profits. Because when we take profit, it means we are leaving the market. The price level where we take loss and we are out of the market. Risks. Risk is what? When we increase our lot size or leverage size, then it means we are taking risk. We have low risk and high risk. High risk is when you are very aggressive in the market. You want to take huge profits in the market. But low risk is when you want to be conservative. You want to take low profits. That's it. Liquidity, the volume of money in the market. Volatility, that's fluctuations of prices like this. It's what we call fluctuation. So we can say what the volatility can be high and it can also be low. So we have low volatility like this. This is what low volatility. In low volatility, we don't make much profit. But in high volatility, you see the distance between the demand zone and the supply zone is what is bigger than as compared to the low volatility. So in high volatility, the distance is bigger. Stop hands. Stop hand is what is when the retail traders stocks get taken care of or get taken out to create liquidity. Okay, so assuming you entered your buy order here and then you place a stop loss below your entry. This is your stop loss. As price moves upwards and retraces back, you see the retracement crosses your stop loss level. So when price crosses your stop loss level, it means you are out of the trade, because the mechanism is that when the price touches your stop loss, it means you are out of the trade automatically. That's how it is. So stop hands means what? When retail trader stops get taken out, create liquidity. So when your stops is taken out, that means you are in a loss. That loss is now a liquidity for banks. Spread. There's something also we call spread in the forex market. Spread is what? The cost of entering a trade. The difference between a bid and a ask price. There's something we call a bid price and an ask price. We shall get there soon. That is what your broker will charge you. You pay for your broker before you trade. That one is automatic. And the bid price. So the bid price is what? Is the selling price of what you are trading. That is the bid price, the price you are willing to sell. And the ask price is what? The price that you are buying at. And the bid price or your selling price. So the difference is your spread. Very simple. Margin is the money set aside with the broker for safekeeping as a proof or collateral that you, a trader, is able to cover a loss, just as a collateral to guarantee you to trade, are you saying, or qualify you to execute your trade. Resistance is a supply zone where sellers sell. It's always at the top. It's a place where sellers sell. It's a supply zone or retail price. Support is at the down here. That is the demand zone. Support is a demand zone. As you can see, the keywords are many. That tells you forex trading is very broad. I wonder those who are using indicators, learning only beginners course, and they are happy that they will do well. There's no way you can be happy and do well in the market if only the indicators. Forex trading involves a lot. Broker, I said it earlier, it's a trading app or a software that provides financial services to traders. It facilitates your deposit and then withdrawal. Very simple. Wow, that means loss. Back tests. Hey, this is another strategy. That's you are doing your analysis on a previous price action. Very simple. When you hold trade for a long time or for long days, your broker charges you a fee that we call swap. Let's say you entered a trade today, you don't want to take your profits or you don't want to close your trade the same day because there are still opportunities in the market. So you decided to hold on to the trade. By doing so, your broker will charge you. But don't worry, that charge is a small token. It won't affect your profits. Paper trading, it means what? Trading on demo account. Before you start Forex Live, you have to start with what? Demo account for some days, weeks or months. It depends on you. You cannot just stand up and then start trading on live accounts. You will start with what? Paper trading or demo accounts until you are perfect. You see that you can do well in the market, then you go live. Very simple. Balance is a cash that you have in your trading accounts, which is what? Withdrawable. When you go on the charts, everything will be more clearer to you. So balance is what? The amount that you have in your account, that is what is withdrawable. We are moving. We are on a correlation. Actually, I was supposed to bring pair. Okay, let me do it at once. Pair must be a correlation pair. Correlation pair, the extent to which one currency pair moves in the same or opposite direction. This means there are two types of correlation pair. You have the positive correlation pairs and the negative correlation pairs. So as I move on, we shall go deeper and look at the various examples that we have. We have slippage. There's something we call slippage in the market. Slippage, at times you will see that orders don't get executed at the previous or the predefined price level due to high or low volatility. Most of the times it happens like that. Orders don't get executed at predefined price level due to high or low volatility. High or low volatility means in terms of high impact news, price jumps. Margin level, that is all. The equity over margin, which is expressed in percentage, is very simple. You have free margin, which is equity minus your margin, and then you also have for use margin, the money that your broker has already taken. Profit or take profit is all. It works as compared to stop loss. It's the opposite of stop loss. It is a mechanism to exit trade when price reaches a targeted profit level automatically. Let's say you are in a bullish market. You entered at this level. As you entered here, always our take profit is above our entry level. So our take profit will be here, and our stop loss will be at the down or below your entry level. Always our take profit is above our entry level, and the stop loss is always below our entry level. This means that as you enter here and price moves upward, the moment price hits your take profit zone, then it will close automatically. That means that is where you are willing to take profit. It can be as high as at this level. It can also be at high at this level, or anywhere you wish to take your profits. This mostly happen when you don't want to spend your time on the charts. It can happen that you are busy or you are doing something else which will not allow you to monitor the charts. So as that is the case, so you just place your take profits and then you leave. But always don't forget, stop loss too is there. So as you enter a trade, make sure you place your stop loss, which is always at the down below your entry level, and then your take profit is always above your entry level. You have something called risk reward ratio. So the distance between your stop loss, your entry level must be what? Smaller than the distance from your entry level to your profit level. So your profit level can be what? 2 times as bigger than your stop loss distance, or can be 3 times or 4 times or at times 5 times as compared to the distance between your entry your stop loss level. Order block, actually it's a strategy that banks normally use. It's a high probability level where price normally tends. It is very good. It is a strategy that most traders use, and it is highly profitable. If you want to know where price will tend, let's say price is in a bullish trend, price doesn't go up forever. It reverses at certain levels. Before you can know the level that price will tend, you must look for order block signal. There are signals that shows order block. The moment you see them, then you know this is what the order block, and that is where price will tend or reverse. Very important. Price zone is a price level where price has not touched for a long period of time but keeps on moving in this direction, but surely come back. Equity is the money a trader has in their account, the money that you have or a trader has in their account, including profits and losses from the open positions. Fair to assault equity. But when you close your open trade, it's no more your equity, it becomes your balance. That is it. So the difference between equity and balance is equity is when you are in a trade, you are in an open position. That is what the equity. But when you close the trade, it becomes what your balance. Order flow. This is another important keyword in forex trading. Order flow. That is the accumulation of prices awaiting at a specific price level or exchange where customers are willing to transact their businesses. So it's very important.
Yo, on this note, I would like to sign out here. See you in my next video. I love you all. Hakuna Matata. Bayi bayi.